back, and joining us on the show now is Mr. Narinder Wadhwa. He's president at the Commodity Participant Association of India, also known as CPAI. Mr. Wadhwa, hi. Thank you so much for joining us. As the days pass by, we are looking at more and more associations, whether it's from edible oils and more so from edible oils and pulses as well, trying to make representations, I'm assuming, to you as well as to SEBI as well, to let trade in commodity derivative market. We do understand it's a blanket ban and it goes on until 2023 December. But what is being really done right now? What are your conversations?
Thank you, Manisha, for having me. As you have mentioned, various associations are approaching us also and independently to the governments also. And there is a need that banned commodities are reintroduced at the earliest. Approaching continuously and having various educational programs also where we can convince the policyholder that these are needed and for a the buzzword earlier and now also that we are going to be 5 to 7 trillion economy in coming future. There is a need that we should have a robust ecosystem in the commodities. And for that, we have to strengthen our MIs, our exchanges, which have all the products. And, these exchanges were made for hedging purpose, basically, and for price discovery. And we have seen in last 2 years, is a extreme volatility. And this is for these volatility, these exchanges were made. So we are continuously representing government, SEBI, and other authorities who have taken decision to, convince them that we need all these products.
Well, absolutely, because there is no hedging mechanism available right now to counter the kind of price volatility that we've seen in many of these commodities. And every time we speak to an edible oil industry, a corporate or a stakeholder, they clearly have been lamenting about the fact that there is no availability of a hedge mechanism here. I also want to talk about the latest SEBI's offering in sense of direct market access to the FPIs. And we do understand that a couple of names clearly have registered. There is some work that has begun there as well. How is or what is your sense onto that?
This DMA is the enabling section. It was cleared in the last CDAC meeting. So whenever FPIs participate in the market, they don't go through the brokers. They access the market directly. So this DMA is the enabling provision. And all along, CPI and other associations wanted all stakeholders to participate in the market. FPIs are the major institutional player who gives the liquidity and depth in the market. So this is an enabling provision. I hope that with DMA, more and more participants will join. I would like to point out one more issue that CPAI has earlier mentioned that FPI participating in these markets should come through the custodian, and their equity and commodity custodian has to be one only. So that clarity we have taken from CPI side. So as these contracts are settled, so they need not go to different custodian. They can come with their existing equity custodian.
Oh, that would be great, wasn't it? I mean, I'm assuming and that would have been the real reason as well to ensure that these participants come on board, because direct market access is nothing new for the equity markets. It already is prevalent there. And opening up the commodity offering to them is something that would just enable them to add this into their portfolio as well. Well, just to tell you that SEBI also has in recent months and years allowed Category 3 AIFs into commodities. We also have portfolio management services now enabled, and mutual funds can also, you can trade via into commodities via mutual funds as well. So we have seen some trickling increase in participation and volumes going to that one as well. But DMAs to FPIs is something that the street has been watching out for. Well, another important thing that you have to look at in commodities is that we have had futures as a trading option for the longest time. But now with options included and options doing quite well for many of these commodities has led to increase in volumes. So much so that we have seen record numbers coming in. Mr. Wadhwa, how have you seen, this opportunity? Because a lot of participants from futures now seem to be moving into options, and that perhaps was the real idea.
See, they were all along interested in the commodities market. Now with the new instrument coming in option, where, we have seen a lot of participation in the equity market. So same set of people wants to participate in the commodities market also. And I would add here that there are a lot of queries from the AIFs, FPIs, and other asset management companies. And I think we should see a robust market in coming.
A final question, Mr. Wadhwa. What is your sense on what can the commodity derivative markets anticipate from here on? Is it going to be new participants? Is it going to be new commodities that the CDAC committees are discussing right now, which we can look at in future?
We are looking at and continuously discussing in CDAC. New products needs to be introduced, and there are few offerings from CDAC, and we have seen WTI introduced in the NSE also, which is doing really great. And I hope with the energy market expanding in India with the growth potential, so there is a need for new products, and we are continuously discussing in various forums and CDAC also that we need more contracts, and banned contracts must be reintroduced.
Absolutely.
All right, Mr. Wadhwa, thank you so much for joining in. Thank you, Manisha, as well. And congratulations on that lovely wordplay that you said. You said futures are the trading option, but now with options increasing, can options be the future of trading? Well, there's way too much pun out there. But what we'll do is we'll discuss these puns when we get into a short break. On the other side, you watch us with Business Lunch, which takes all the market action ahead.